The S&P was down 0.12% today, closing at 6362.90, but that really masks the action that was happening underneath the surface. During the Powell presser today, after the FOMC announcement, we saw the market sell off about 0.5% in less than 30 minutes. Ultimately, the market is concerned that the Fed may not begin cutting rates next month, and so that was the initial market reaction. We did see a bounce heading into the close, and now in after hours, after Meta and Microsoft have reported, we are trading back above the highs of today. So we're somewhere above the 6,400 level as of this recording. So we'll have to see where the market opens up tomorrow. Zooming out to our daily candlestick chart, in terms of the market structure, the 6,500 strike is now the largest gamma exposure concentration. We have seen that shift over the last several trading sessions as we have approached this 6,400 level. So if futures continue to hold overnight, we could open at new all-time highs again tomorrow, and that's typically the type of environment that we see in these positive gamma exposure structures.
Thanks, Anthony. Some interesting divergences today between SPX and QQQ, closing very close to the whole moving average, while IWM did close substantially below the whole, which I view as a bearish signal. For IWM in particular, what I'll be watching for is any rebound attempt tomorrow to see how it behaves around this 224 area. I would expect that to represent fairly significant resistance, given that we've had several days in a row of failing to get above that line and closing below it. You know, we still see 230, a very meaningful GEX out at August 15, but the entire picture has shifted more negative, and volume was almost exclusively at these negative strikes today, all the way down to 210 and even 205. Though I still view 210 as an area that might represent a good buying opportunity. But for now, I would view this as a negative divergence that's sort of a warning signal, even if we see a big positive day for QQQ tomorrow. So after hours indicates tech is positive, and we'll see how things transpire soon.
Thanks, Sean. Next, let's take a look at GLD, the gold ETF. It's had a really big pullback over the last 5 or 6 trading sessions, now down to the big 300 level, down 1.73% today. Just last week, though, we were trading up at this 315 level. You can see this has been resistance going back to the April timeframe and just could not get above the 315 to 317 zone. Now we are back with today's trading action below the 50-day EMA. This has been a previous support zone. You can see this highlighted by our lower dealer cluster zone. This has been a previous support zone for 3 months. Gamma exposure structure is still positive with the largest GEX at the 315 level. We do continue to see volume coming in at these higher strikes, although it has diminished in the last several weeks. The big volume today that we saw at the 300 strike, though, is interesting to me as price came down into this level. So at least in the options market, there is quite a bit of activity from the 300 strike and above. So this could offer potential support here. We've been trading a weekly income strategy on GLD for the last 3 months or so with the aim of earning an average of about $1,000 a week. This is in one of our portfolios, and we basically have been selling short dated puts against longer dated puts in a diagonal type strategy. And so far it's been working really well. We have been averaging just under $1,000 a week, which, by the way, if you're interested in tracking our trades in real time, you can become a member at geeksoffinance.com, link in the description below. But in terms of GLD going forward, I do think that it's going to be important over the next several trading sessions that we see some support established here around this 300 strike. And ideally, I'd like to see some momentum coming back in and getting back above this 305 level.
You know, even with the challenges of the last couple of weeks, we've still been getting good signals in certain areas. One of those was the VIX, which even yesterday, you'll recall on both YouTube and in our newsletter, we were highlighting that the 4-hour VIX appeared to be on a buy and appeared to be signaling a move up to potentially 17. Well, what did we see today? Almost right on the dot. And then today's late day decline in the VIX went right through all of these support areas again, opening the door to potentially seeing the VIX reach a sub 15 reading. But I don't think that we'll see volatility drop much lower than the 14.5 area on the VIX. And we'll make a couple of observations on the daily chart. Today's decline still stopped right at the daily whole moving average, 1540. We actually closed at 1548, so just a little bit above that. But we're still not seeing the GEX picture signal very high odds of getting and staying below 15. But with the VIX this low and a support area going back quite a long time, showing that this will be a tough area to breach and stay below, I still think this lends credit toward the idea that IWM is showing us as well that we may see the market pull back a little bit more, even if it's not tomorrow.
Thanks, Sean. Next, let's take a look at BROADCOM, up 1.77% today, closing at 302.69. BROADCOM is one of those names that is a little bit less recognized than, let's say, the MAG 7, but has done really, really well since those April 7th lows, and it is, of course, a mega cap tech company. We see gamma exposure concentrated between 300 and the 320 strike. Volume is also strong, in particular at the 305 and the 310 strike. So when we look here at our options volume for today, we're seeing continued strong volume when this is eventually going to translate into our gamma exposure data. And so we're seeing growth in gamma exposure at this 310 and 320 strike. So even though our upper dealer cluster zone is concentrated between 300 and 303, the fact that we're seeing this much activity at higher strikes means that there's a good probability that price can continue in this big uptrend that it's been in for the last 3 months. BROADCOM continues to remain well above the 50-period EMA, and so as long as this continues trending higher, we will see pullbacks, of course, but so far all the pullbacks in this trend have been very shallow. And so BROADCOM's got earnings coming up at the end of August. As long as we continue to see this earnings season shaping up pretty well, I think this trend in BROADCOM is going to continue for the next couple of weeks. So this is a name that we are going to be considering for an addition to our options portfolio, which, by the way, you can track our trades in real time in our community Discord, link in the description below.
Let's take a quick look at Meta. Meta and Microsoft both reporting earnings after hours and seeing pretty substantial bumps in price. Meta, a large GEX cluster at 750 and also at 800. And it looks like after hours we're trading in that 775 area. So right in between these two big GEX clusters. So that's actually not too unexpected given the positive skew of the overall GEX picture. And for those of you that have Meta, perhaps this will help in analyzing some possible targets. But for now, given where we settled out at the end of today, these might be some levels to keep an eye on in context of what Meta does in the morning. And we'll also be looking at an updated picture in the morning, depending on how participants shift.
And for a limited time, you can get $300 off our yearly Portfolio Manager tier subscription. Use code SUMMER2025 at checkout. We have a few spots remaining, but this promotion is about to wrap up, so take advantage of it while you can. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.